Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 28th of February. So I've seen some very big moves this week. Some key levels that were hit basically the week before have all rejected. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. Okay, so we'll start out here with the Aussie USD, and we can see, we'll just blow it up a little bit. We can see that we hit that level of 64 cents basically late last week, and then we saw a rejection candle. And once that started to basically sell off from that point, you can see that the very next candle was a shooting star candle at around the same point. So this particular candle actually did get to 64 cents as well, but it's actually the body of that candle which makes it really significant. You can see that we've got quite the shooting star. Had a very serious attempt at going long and then failed, and it's the open and the close that really dictates what has happened in this point here. And you can see that happened at the start of the week. So we've attempted to go long and break to a new high again, but the complete day's action was reversed, and you can see we've got quite a decent shooting star off a level that we know is very strong resistance. So that's always a very good sign that there is an imminent pullback, really, and we can see that that actually happened. The easy trade was down to the 20 moving average, which is obviously down to that sort of 63 cent mark, but it actually continued and pushed past there, barely touched it actually, and pushed all the way down to 62.40. Now, we did see some very big selling action in the last day. As you can see, the last 24 hours have been very interesting, but the initial trade was a relatively easy one down to there. Now, if you miss this point here, you shouldn't be too disheartened, because you're going to get that sometimes. You really want to be aiming for the solid trade. And that solid trade was to the 20 moving average, which was a pretty good trade. It was about 80 points off that sell zone. So realistically, it continued on. I think now that it has broken through good and proper, and we're seeing some very heavy selling action. The 62 basically flat is what we're aiming for, which is the previous lows here. So at the moment, it's still about a 50% fib of that entire move. So if it turned around here and started to push up, I'd be very cautious around the 20 and 50 moving averages. They would be the ones that could potentially cause it a bit of a problem. But realistically, the trade now is probably down to that 62, especially if we can see continued lower highs and lower lows. We'll go to a 15-minute chart, and you can see basically what I'm talking about here. All the way down, we can see we've got lower highs and lower lows pulling back to the moving averages. If we continue to see that sell-off, and it's only 40 pips from here, so it's not that big a deal really, but it's still what we want to trade. If we're scalping, that's what we're looking for. So I would be looking at that as the next target. And until we see a high low sequence, obviously on a 15-minute chart at least, I wouldn't be looking at going long, and the moving averages would be the first place I'd be looking at a point of resistance, which is around that sort of 63 cent mark. So yeah, good trading potential coming up on the Aussie. I think we're finally starting to see some pretty good moves. All right, US dollar CAD, we'll have a look at this one as well. Look, this one basically did the opposite, of course. It started getting up and trucking. Once it got the, again, the candle really that told the story was this one here, the 143 close. Once we saw that, we don't really want to get involved in the turnaround action, because we don't really know about that level and how strong it is. So really what we want to be focusing on is once momentum actually shifts. And that momentum certainly did shift around this level here. Once it broke above the moving averages and that resistance level, which is around that 143, we were off and running. And the next part here, that next 100 points was pretty good trading. It's fast approaching resistance, so we can see we've got a bit of resistance here at 144.50. I'll put a horizontal line there actually, and that way we know that we've got, oops, I did a double line, it's okay, I'll just get rid of one of those. Yeah, that way we know that, the target is very fast approaching. So there's not a lot of room to move before we actually do hit a little bit of resistance. It doesn't mean it's going to stop, but given that we've seen a pretty big move, the resistance is most definitely there. If it does break through there, obviously the previous highs are what we're shooting for. But for mine, if you did enter where you needed to enter, which is around this area here, this is the target for me, around that sort of 144.50 on the CAD. So really good trading on it. If we see a bit of a reversal at this point here and we start to see a series of lower highs and lower lows, I'd be aiming back down to that 143 flat as the area of interest, especially if it does it very quickly, because the moving averages are still there to help bolster that support. And that's the most likely scenario. So that's in this zone is what I'm really looking for the CAD. All right, US dollar yen, and we saw a little bit of a bounce off. We hit our target last week, obviously around that 149. That was pretty good. We're starting to see what is effectively a little bit of a reversal from here. The point I'd be aiming for, I wouldn't be going any higher than the 151. That would be my target, especially if the 20 moving average is still hovering above that level. If it happens in the next few days, the 20 moving average will catch it up. That would be a really good reversal point. I'd be looking for that reversal at that level around that 151. So a little bit more strength in the price action, and aiming for the 151 and the 20 moving average as resistance. And then really, I wouldn't short it initially, of course. I'd wait for it to actually start to weaken again. But if we do start to see a series of lower highs and lower lows from that level, I'd be looking at shorting it in the first instance back down to that 149. If we see a turnaround before then and the daily closes below 149, let's say below this level here on a daily, the next level we'd be aiming for is around that 146, which is this level here. You can see that we've got some support and resistance around this level. I'll pop a horizontal line there as well so we know what we're aiming for. But a daily would have to close below the 149 for me to be doing that. At this stage, it's looking stronger to the move up to the 151 and the 20 moving average. So, good trading there as well. All right, dollar index, and look, a little bit of a bounce off from what has been a very strong level. This is why we have these levels, right? It's very, very important to have our support and resistance drawn up and talk about them, because that's where price gravitates to when it is on its way down. And obviously, it found support here this week and bounced off, quite aggressively off around that 1.6 level. Hit the 20 moving average and the 50 moving average. There is a little bit of a problem in front of it right now with those moving averages, but 107.90 to 108 is actually the very strong heavy resistance. So I'm not a little bit concerned about the 20 moving average, but of course the euro is the one we want to be trading. So we'll go to that in a second. But look, there's been really good strength off this, and this is why obviously we've seen the US dollar CAD go up and the yen go up and the Aussie dollar sell off. So the euro is no different. It's been a little bit more resilient, but you can see here we have got a little bit of resistance. So you want to be a little bit careful from there, but no real surprise. We found support around the 106. So on the euro, we can see that obviously the last day has been a bit of a sell-off, but it was a bit mixed before that. It was trying to break to a new high. We can see that we've got touches at around that sort of 1.520 area. Pretty strong area to be pushing into. So now that we've broken through the moving averages on the way down, it's starting to look a little bit dire for it. Not panic stations at this stage, but we wouldn't want to be going much lower than this 103.87 area. I'd be very, very careful around that zone there. That would be the point where I'd be probably thinking if we get a breakthrough there, I'd be starting to look at these lows again. But again, we know we've got the dollar index at a reasonable level of support. Or resistance really, so which is going to be support on the euro. So probably around this level here, a little bit lower than probably that 104 flat, maybe 103.80 would be the final line of defense. If we get a level broken through there in the daily closes, especially if it's there on Monday and we're trading under 103.80 on Monday, I'd be starting to join the trends down to the 102.80 area as the next level of support, because then of course the dollar index must have broken through that resistance that it's got above, and we'll start to track higher. All right, S&P 500, and look, we're finally starting to see that weakness that's been promised for a while. Everyone's been calling for it, so it's finally starting to weaken. It's not panic stations yet. Look, earnings season's all out of the way, and realistically, and it's not as dire as it may seem. It's been going sideways for quite some time. This is not really that big a deal. It's not much different to what happened here. Sure, it happened relatively fast, but as you know, we did recover from this point. It's 108.80, 58.80 is the level that I would be worrying about if we get a breakthrough there, because if we're daily trading underneath that level, like if we're getting closes on the daily underneath that level, I think it opens itself right up to a 57.50 move, because then we're looking at the very next support. And this is a pretty strong level, right? The 58.80, we've got very strong resistance through there and support right through that zone. So if we went through there without a yelp, I'd be starting to get a little bit concerned. But I would imagine that we're probably going to get a little bit of consolidation around this point. And if we do, there might be a scalping opportunity back up to the moving averages, back up to around that sort of 6,000 level, which wouldn't be a bad trade, especially if it happened in the next 24 hours. But if we are trading underneath 58.80 on Monday morning after this week is closed, I think the 100 100 points down to 57.50 would be the likely target, and I wouldn't be really interested in the long. If this level doesn't hold up, it might be in a little bit of trouble in the shorter term, so just be mindful of that. All right, everyone, thank you for joining us this week. We've seen some really, really good moves. And like I said, the levels that we've had drawn up for a while have certainly done their job and have given us some really strong moves this week. So hopefully you're able to take advantage of some of those. Have a fantastic weekend, and I look forward to seeing you all next week.